Here's a shocking truth. Even as U.S. stocks dipped just before the Labor Day weekend, they still managed to climb higher for the month. But here's where it gets controversial. Is this a sign of economic resilience, or are we overlooking deeper vulnerabilities? Let's dive in. On August 29, U.S. stocks closed lower, but the overall monthly performance told a different story. Despite the Federal Reserve's preferred inflation gauge, the Personal Consumption Expenditures (PCE) price index, ticking up as expected, consumers showed surprising resilience in the face of ongoing tariffs. The PCE index rose 2.6% annually in July, matching forecasts, while the core rate, excluding volatile energy and food sectors, climbed to 2.9%, the highest since February. And this is the part most people miss. Harry Chambers, assistant economist at Capital Economics, noted that the rise in core PCE prices was driven entirely by services, suggesting tariffs have had minimal impact on goods prices. Thought-provoking, right? Consumer spending data further underscored this resilience. Personal income rose 0.4% in July, up from 0.3% in June, and spending accelerated to 0.5%. Heather Long, chief economist at Navy Federal Credit Union, highlighted that spending outpaced income for the first time since March, a sign consumers are still eager to spend when they spot deals. Notably, there was a significant rebound in spending on cars and auto parts, a trend worth watching. Markets were quieter than usual due to the 3-day Labor Day weekend, but the numbers still spoke volumes. The Dow fell 0.2% to 45,544.88. The S&P 500 dropped 0.64% to 6,460.26. And the Nasdaq slid 1.15% to 21,455.552. Yet, all three indexes posted gains for August. The Dow hit record highs and ended the month up 3%. The S&P 500 rose nearly 2% after surpassing 6,500 for the first time, and the Nasdaq gained over 1%. Now, let's shift to a contentious battle: Cook versus Trump. Federal Reserve Governor Lisa Cook faced off against the Trump administration in a court hearing on August 29, seeking to block her dismissal. The 2-hour session ended without a ruling on her request for a restraining order. Cook's lawsuit challenges Trump's unprecedented attempt to remove her from the Fed's board, which sets monetary policy for the nation. Trump cited alleged mortgage fraud as the reason for her firing, a claim that has sparked debate. What do you think? Is this a justified move or an overreach of power? In corporate news, there were plenty of headlines to unpack. Kraft Heinz is considering a breakup, sending shares up 2.68%. Alibaba's cloud computing business surged 12.9% on AI-driven demand, while Celsius shares rose 5.34% after PepsiCo increased its stake. Ulta raised its full-year outlook, but saw shares fall 7.14%. And Ambarella's stock soared 16.78% after topping estimates. Marvell Technology, however, slumped 18.6% on weak revenue guidance. Petto swung to a profit, boosting shares 23.53%, while Dell's AI-driven optimism couldn't prevent an 8.88% drop. Affirm jumped 10.58% after strong fiscal results, but Caterpillar's tariff concerns led to a 3.65% slip. Gap and Privia Health both saw modest gains, with shares rising 1.59% and 5.64%, respectively. In the world of cryptocurrency, Buenos Aires made waves by allowing local taxes, vehicle registrations, and even fines to be paid in crypto. Is this the future of finance or a risky gamble? Jorge Macri, the city's chief of government, aims to position Buenos Aires as a global crypto leader, streamlining compliance to attract new businesses. Meanwhile, Bitcoin dipped 4.05% to $108,015.70. A reminder of crypto's volatility. As we wrap up, here's a question to ponder. Are these market gains and corporate moves signs of a robust economy, or are we overlooking potential risks? Share your thoughts in the comments. Let's keep the conversation going.